Hello, everybody. Welcome to the webinar New Year, New Tax Laws and Obligations. Today we are very fortunate to have Lainey Coleman with us from Avalara. She is going to be presenting and talking about, sales tax and all that type of good stuff. If you're a fan of Twitter and you want to tweet us and ask questions or whatnot, you please use the hashtag AvalaraSSI. And with that, I am going to pass on over to Lainey, and she can get started.
Great, thank you so much, Michael. I'm gonna get things going here. All right, can you see my slides? We're gonna be talking about the new year. Thank you for verifying that. The new year, new tax laws and obligations, and really why this is the new tax laws and obligations is the impact of South Dakota versus Wayfair on compliance. And again, thanks, Michael, for the introduction. I'm Lainey Coleman. I'm the Alliance Manager here at Avalara, and I work very closely with Michael and the team on issues with sales tax compliance and how do we help you as their customers and clients. And so today we're going to run through a few things, talk about what's the big deal about all this sales tax stuff. What happened and what is the South Dakota versus Wayfair thing and this economic nexus deal? What should I do? How compliance works and how Avalara works, and then just talking about the inevitable. What's the future look like with all of this? So with that, I'm going to go ahead and jump in on that, the whole issue. What is the big deal with sales tax? Well, I want to ask you to just do something for me. Take a step back in time and think about sales tax. You know, this has been important for a long time across many civilizations. Think about the ancient pyramids and the Roman Empire. Sales tax actually helped to build that. And then if you think about the United States, remember the Boston Tea Party? Well, as we all know, that was about sales tax. And the other thing on this particular slide that I find interesting is that sales tax is a major source of revenues for our states, and it comprises almost 50% of total revenues. So it's a big deal. But not only that, it's so important that it's a statutory requirement. So companies need to either be compliant with that requirement or prove that they're exempt from it. So that's a big deal. I mean, when you think about just that one thing alone. But reality is another matter. So when we look at companies that we work with and that we interact with, it's treated in one of three ways. So it's either you're fighting it, you stay compliant and you abide by the orders, or you take the ostrich approach and just hope that you don't get audited. So the question is, why is that? Why do people take those different approaches? Well, because let's face it, sales tax is really hard, and it's not always something we want to deal with. But how hard is it? Well, when you look at different research studies and information that we've gotten from companies like yourselves, or I should say positions, people in the financial and accounting positions, when you look at 42% would rather get a root canal than go through an audit, a sales tax audit, that to me, it's telling me it's really hard. I've had a root canal and I don't want to do that again. So that's telling me it's really hard. I'm not a math wizard, and so if you look at almost 50% of people in finance and accounting, I consider all of you extremely smart individuals, but almost half of you think that a Rubik's Cube is easier to master than sales tax laws. That's telling me this stuff is hard. And when almost 70% say that understanding all of this compliance stuff is one of the most confusing aspects of the accounting team's job, it's hard. It's hard. So not only is sales tax hard, but it's confusing. And why is it confusing? Well, there's a common misconception that it's all about finding that correct rate, and that's all you have to worry about. But as you can see here, the rates, that's the tip of the iceberg. So what are all the other things that you have to worry about when you're thinking about being sales tax compliant? Well, in order to do sales tax right, you need to know where you have Nexus. So what does that mean? You need to know in what states you're required to collect and remit sales tax. Not only that, you need to know in which states your product is taxed and how it's taxed. And if there's certain situations that something is a bundled shipment or a tax holiday, or the flour content in a candy bar, if it's taxed or not. I mean, how do you manage all of that? Then there's over 12,000 tax jurisdictions across the country. Do you know all of them? Do you know where the boundaries are and the lines? Do you even want to manage that? That's another thing that makes it complex. And then if you're doing business B2B, you're not on the hook for collecting and remitting sales tax. But the catch is you have to provide exemption certificates to prove it. If any of those are wrong, that creates liability on you for collecting that tax. There's also the burden of monthly, quarterly, annually prepping and filing the state and local tax returns. And then finally, you need to be ready in case an auditor comes knocking on the door. So you need to have those reports and the information that they're looking for at hand and correct. So again, rates just the tip of the iceberg. There's lots more to think about when you're looking at being sales tax compliance. And trying to deal with all of these challenges manually carries a huge price tag. So if you look at this, again, this is another Wakefield research study that we've done, or that Wakefield has done, but look at the cost. I mean, a small and medium business, that's, you know, a nice salary just to manually manage this piece of the business. And if you're an enterprise customer, it shoots up exponentially. You know, almost $70,000 a year for a small organization, and we're hitting $400K for an enterprise. That's a lot of money to try to deal with all of this manually. But here's the deal. Being compliant manually is a challenge, but it's also risky. I mean, this statistic just completely blows my mind. 3/4 of all CFOs admit that a sales tax audit would uncover errors. And those same CFOs are paying valuable accountants a lot of money to keep the company compliant. So high risk, high cost, and you still might get it wrong. So to me, you know, it doesn't make sense to do it manually. Let's look at how we can automate this to be more accurate, save your company time, money, and allow you to focus on things that can make the company money versus costing the company money. So let's talk about how much an audit can cost a company. Sales tax audits aren't fun, but they're also costly. And so an average audit can be over $50,000 for one audit. So what comprises that cost? It's the time. And then, as you saw in the previous slide, 3/4 of CFOs says, yeah, you're probably going to find something wrong. So then you have the back tax payments, the penalties and interest, and that can add up. Things can go back as far as 10 years. Who wants to pay that for having a mistake? So, you know, again, another crazy statistic is almost half of accountants who've been through an audit consider the experience more difficult than a divorce. And divorces are stressful and costly and not fun at all. So we want to help you avoid the stress and the pain of that. And I tell you what, once you're audited, and especially if it's been what auditors call a productive audit and they've found some issues, expect future audits from the same state along with other states that you may have issues with. So again, it's more complex than it seems, and you may have already even experienced this. So we want to help you avoid some of that as well. So until recently, when you look at Nexus, it was triggered by having a physical presence in a state. But then you look at, there's lots of other things that create Nexus. And what Nexus is, it's that relationship between a business and a state that triggers the requirement to collect and remit sales tax. So look at all of these different activities that can trigger that nexus in a state. So previously, this was pretty much it. There's physical presence, but then there were other things that you could do. And the reason we're talking here today is what happened back in June of 2018. The two rulings, Quill versus North Dakota and then National versus Department of Revenue of Illinois, they were the rulings that created that physical presence. But because that's kind of out of date, if you will, it says here unsound and incorrect, but essentially the way we're doing business is different. So South Dakota versus Wayfair overturned these rulings. Okay, so that physical presence rule has been overturned. And it is not the only thing that states can look at on how they can create nexus. They actually replaced a new rule, and that ruling is considered economic nexus. So again, we talked a little bit about nexus, how it's triggered, but now it's triggered by a remote seller's annual sales dollars into a state or the number of sales transactions. Notice how I say or. So if you look at, you could be selling a low dollar ticket item and not trigger the sales revenue threshold. But if you have high volume of transactions, you can hit that sales transaction threshold. And that's where the South Dakota versus Wayfair ruling really affects a lot of organizations. But the question is, who does it affect? Well, all remote sellers, both online and offline, not registered within that state, who meet the state's economic thresholds, that's who it affects. That could be a lot of people. And in South Dakota, in particular, their thresholds are listed here. It's annual sales in excess of $100,000 or 200 transactions. Every state will be different, and every state has different start dates. And I'm going to show you how this looks. So since last June, states have been adopting their own economic nexus laws. And I have all of these effective dates because it's really interesting to me how people were jumping on this even before South Dakota themselves. They're the ones who had this ruling done, or I guess took things to the Supreme Court. But there were other states who were watching this, and they actually put effective dates before South Dakota did. Followed a lot of South Dakota's dollars and thresholds. So a lot of companies simply copy and pasted South Dakota's thresholds. Blue, the state. So there's about 30 states who have adopted this. By the end of the year, I would say a majority of the map will be blue as well. You're going to have more states adopting it. And the issue is, why is this happening? Well, states are so desperate for revenue. They're motivated to adopt new laws, and especially this economic nexus law. The most recent and big one that's been affecting people, as you can see down in the lower right hand, is April 1st, California. The law went into effect. And why is that important? Well, California has the 5th largest economy in the world. And so it's going to affect a lot of people. There's a lot of business that goes in and out of California. And we're going to see, you may even see your own organization affected by that. And then later in the year, we'll see Texas, New York, Pennsylvania jumping on with their own economic nexus laws and effective dates. So I wanted to just kind of give you a visual impact on, or a visual, I guess, overview of what a company used to look like and how it'll look in the future. So on the left-hand side, you'll see prior to the ruling, this particular organization had nexus in 3 states. Maybe 4, maybe a few more, but you can see the blue states. So California, Texas, Pennsylvania, Maryland, and a few other, maybe New York or what have you. But So they may have had, so the headquarters, let's say, was in California, Texas had a warehouse, and they had a branch location in the Northeast. So then the company started selling online through e-commerce, and eventually there were 17 states that there was economic nexus in. And by, a couple of months later, they had e-commerce in all 50 states. So this is just a really small representation on here's how things could affect an organization in a really, really quick way. The net effect of the ruling is that it can increase an organization's sales tax obligations exponentially and very quickly. So the compliance process, in a nutshell, is a pain in the neck. I mean, quite frankly, especially if you're doing this manually. It takes a lot of time. It does not create revenue, generate revenue, I should say, to your organization. And if it's done incorrectly, it can put a company in jeopardy, put a huge burden on back taxes and fees and that sort of thing. So we really want to help work through all of this with you. And a lot of companies, this particular ruling is a trigger for companies to automate or even outsource that process. And we'll talk about that a little bit later at the end, and that whole inevitable what's going to happen in the future. And we'll discuss that. So the other thing that I think is really important with this ruling as well is a lot of people look at it and say, most of my sales are tax exempt. So the South Dakota ruling doesn't apply to me. I'm doing business to business sales. Well, the thing is, in many states, that threshold includes both B2B and B2C. And so it would create nexus and trigger that. So if you're doing business B2B, exemption certificates are going to be a requirement, and it's really going to be important that you have everything filled out properly, that they're not expired, that they're current, because it's not necessarily about collecting and remitting the tax, but it's about proving why you didn't. So most companies overlook that importance, of that piece of paper or that requirement. Exemption certificates are the same thing as cash. And if you're missing just one, it could cost thousands and thousands of dollars in an audit. And so it's just really important to understand that it isn't always just B2C, but it can also include B2B. So we don't want to have you missing this and having an increased audit risk, because many times auditors, that's the first thing they look for. So just something to think about there. So I've thrown a ton of information at you in a really, really short period of time. So you're probably thinking, okay, now you're scaring me, so what do I do? So I can help you with that. The first thing I want to reassure you, don't panic. It isn't anything to panic about, but it is something that you'll need to understand, the changing tax obligations. So if you have a trusted state and local tax CPA or a trusted tax attorney that can advise and counsel you, that's where I want you to start. But if you don't, we can certainly help. Avalara has an extensive directory of experts that we can connect you with. You can use our tax advisory services team to do a Nexus study to figure out where you have Nexus currently, where you may have Nexus shortly in the future, and then we can look at other tax-related needs. But it's important to just reassess what you're doing, take a look at where you're currently registered, and then look at how you're doing things today and decide, could there be a better way? Are there ways that we could do things better and make sure that we are compliant? So then the question is, how does all of this stuff work? You guys are in the cloud. How do you connect to the systems I'm running? So I just want to give you a visual, and this is kind of, it's a busy slide, but we do have a total end-to-end compliance solution. And so we kind of have three pillars here at Avalara. It begins with AvaTax, and AvaTax is kind of the main product here for rate calculation, jurisdictional validation, taxability rules, address validation. And so that's our main key product that will help you set everything up, what is taxable, where you're registered, where you have Nexus, where you're selling into. And everything is done by an address validation. So we look at the latitude and longitude location of everything that we're selling to, and we get the right taxability and jurisdiction that we're creating those the tax calculations for. And then we have 600 plus connectors that will link directly into your ERP or e-commerce system or just about any system where the invoicing is taking place. Now, we talked a lot about the burden of proving why you may or may not be collecting those taxes, or I should say why you aren't collecting taxes. And that's with the Avalara Cert Capture. That's another pillar or product that we have. And Cert Capture allows you to ensure that all of your certificates have been filled out properly, that they are compliant, that they haven't expired. And the beautiful thing about that is Cert Capture links directly into Avalara as well as your system that you're using to look at customer data and ensure that if there is a certificate that's becoming soon to be expired, it will automatically alert the customer you need to renew your certificate and update that certificate. You'll be notified as well, and so that you can just keep things up to par and make sure that you are compliant as well. And then, as we all know, we can collect the tax, but if you're not telling the states, remitting the states, looking at reports and getting things submitted every month in a timely manner, again, there's penalties and fees for not submitting on time and to the right places. And so Avalara returns can ensure that everything is submitted properly to each state. That every state has different rules, whether it's monthly or quarterly, and Avalara can help you pull that report. You take a look at it, ensure that it's correct, and submit that, and it's just a full process end to end. So I talked a little bit about what's happening today, but what's going on in the future? And that whole accelerating the inevitable. Well, let's jump into that. What does that exactly mean? Well, when you look at in just 3 years, the adoption of compliance in hosting solutions will grow 40 times. Many companies will be outsourcing their sales tax compliance. And I see that as, back in the day when I first started my career, our payroll everything was done in-house. There was a payroll clerk and they cut the checks and we had paper checks and everything was done by that one individual. Well, nowadays, everything's outsourced. It really isn't an area that companies have, someone specific to payroll. It's sent out to an organization to do that for them. And we're seeing more and more companies doing the same thing with tax compliance. Top performing companies are leading the way, and they're 3 times more likely to adopt compliance in the cloud. And so it's important to have things done that are accurate, but also easy for you. So you'll see more and more people will be adopting this and taking this risky and burdensome area of the organization off their plates, if you will. So the bottom line is, you all know, any effort spent on tax compliance is non-revenue generating. So what we want to help you do, find the areas where you can build your business and make money for your organization, and we want to help take the rest of it off your hands. We talked about the issues of manual tax compliance. There's no reward for it. I mean, if you do it well, nobody pats you on the back, but if you do it wrong, it is a bad deal for an organization. So it's no reward and high risk. And then the ruling makes the already burdensome compliance process even more complicated because it's added more requirements and another type of nexus that most companies hit those thresholds pretty easily. So if I can steal the best quote from Jack Welch, who we all know, do what you do best and outsource the rest. So with that, I'm going to open it up to questions. I do have just a thank you for attending today. We'll be sending out a link to our ebook, Sales Tax for Dummies, that can really help answer a lot of questions that you have and just help you learn a little bit more about Avalara and the sales tax compliance issues. So Michael, have there been any questions in the chat?
No, Laney, I do not see any. So it looks like you did a phenomenal job covering every subject.
I'm thinking if there are more questions, maybe you're just shy about asking them. Don't be shy, but you can certainly send me an email. You can connect with Michael and the team at Solution Systems, and we can help you answer those questions as well.
Definitely. So with that, then thank you very much for presenting. We truly appreciate it. And like Laney said, if you have any questions or whatnot, please feel free to reach out to us at Solution Systems or Laney, and we'll get those questions answered, right?
Great, absolutely. Thanks so much for the opportunity.
Thank you, everyone.